this together.
Thank you, April. She flew from
Orange County.
Orange County. Thanks for coming here, April.
My pleasure. My pleasure. Oops. I'm not sure if this is moving. Ah. Okay, that's why. Okay. I don't do this every day, obviously. So, how many people here own homes currently? Quite a few. And how many are looking to purchase in the future? So a lot. So wonderful. So I'm going to go over today some advantages of home ownership, getting ready to buy a home, mortgage loan basics, the home purchase process and closing your home loan, and choosing your team. So the advantages of purchasing a home, especially versus renting, is obviously you're owning a long-term appreciating asset. And you're also securing your monthly payment versus paying rent. Here in Santa Clara County, the average rent price for a 3-bedroom home is about $4,500 a month. And those are increasing about 10% per year. So that is very costly. Of course, also when you're paying the rent, you're not getting any equity accumulation from that payment. So if you purchase a home, you obviously are getting the equity, building the equity of that. And there's also tax advantages that either interest and possibly property tax interest deductions. And also, you can personalize your home. Obviously, when you rent a property, you can't paint or do any of the things that you want to do. So getting ready to purchase a home, there is 2 types of approvals, both pre-approval and pre-qualification. There are a lot of lenders that basically take your information and just issue a pre-qualification very quickly. Pre-approval process is a lot more in-depth. Takes W-2s and your asset statements and looks at all of your items to make sure that you're going to have a loan on the other side. I've seen a lot of people that have come to me that have been pre-approved, or they thought they were pre-approved, only to find out later that they didn't fit the qualification later. So you really need to get somebody that is going to look at all your documentation, make sure and tell your loan officer all of the idiosyncrasies of your situation so that we can work it out up front, because we're your advocates and we can help you get the best loan possible. And there are different investors also that take different types of loans. So we may direct you to one investor and do your loan through that versus another. So it's really important that we have all that information up front so we can promise a loan for you. So the couple of very important things during your pre-approval, your credit profile and your down payment. So credit profile, a lot of people, it's a little mysterious on what credit really is, what a FICO score is, what contributes to a FICO score. A lot of times that information isn't given out real readily. They assess on-time payments, and they also assess percentage of utilization of credit. So basically what that is what percentage of the line amount of all your revolving credit are you currently using. So if you have a credit card that's $10,000 line and you have a balance of $5,000, then you're using 50% of your line. So by keeping that down will help your credit. So we look at the credit profiles, and if we do the pre-approval and that needs improving, I'm always happy to suggest some things that might help you. So the types of home ownership, we obviously have the primary residence. We do second homes, which are also vacation homes, and investment properties. We do all types of loan programs. There's FHA, conventional, jumbo. We do veterans loans, and USDA loans, which are on rural properties. We don't see many of those here in Northern California. Today, the 2025 conventional loan limits in Santa Clara County are $1,209,750. So anything above that is a jumbo loan. And we can still do those, most of the jumbo loans with 5% down. Most often people put at least 10% down on that program. So we have fixed rates and ARM rates. ARM rates are adjustable rate mortgages that are fixed for maybe 5 years, 7 years, 10 years. People often wonder, well, which program should I go for? Right now, we're doing a lot of the 5-year fixed loans or 7-year fixed loans because we are expecting interest rates to go down in the future, and you're probably not going to keep that loan for longer than that time period. 30-year fixed, some people are more comfortable with a 30-year fixed. That's fixed for the life of the loan. But like I said, the ARM loans are very popular right now because they're saving you in interest, and if you're not going to keep the loan or don't expect to keep the loan for that long, then the interest rate, then it's better to do an ARM loan and get the lower interest rate. So monthly payment is consisted of principal, interest, tax, insurance. Your principal is the amount that you're paying down on your loan. Interest is the interest accrued, and then you have your taxes and insurance that you're paying with the mortgage payment, or you can also pay taxes and insurance on your own under certain circumstances. Oops. So mortgage insurance. What is mortgage insurance? Basically, if you do not put down at least 20%, some lenders require it. It is insurance. It's something that, certain lenders require you pay, but it basically insures the lender in case the person defaults. So we have a lot of tips and things that we do to avoid this and make it so that you don't have to pay the mortgage insurance, because that's also not tax deductible. So the home purchase process, first thing you want to do is get pre-approved. If you get pre-approved, have your pre-approval, then you search for your home. Once you're in a purchase contract, then that's when we can take over the file, lock your rate in, and start your loan process. We send out your loan disclosures. Once we do that, we order your appraisal, and we send it to our processing staff and underwriting staff. So basically, underwriting, so what is loan underwriting? You hear this term a lot. When a loan is taken to the underwriting department, they're looking at everything. We're verifying your employment, your income, your assets, all aspects of the loan, the title documents. So once that is completed, then we'll get your loan approval. And then from there might be some outstanding conditions that are required during the process. So what are the potential pitfalls that we see during the mortgage process? One of them is applying for new credit. So we're monitoring, once we pull up your credit, we're monitoring your credit. If you apply for a new credit card, we're going to need to see if you have a balance on that and possibly qualify you. If there is a balance on that, qualify you for that balance. So don't apply for new credit unless you speak to a loan officer first. Also, charging up existing credit. That can cause a problem because if you owe more money and have a higher monthly payment, now suddenly you could have some problems with qualification. Transferring money between accounts. We have to paper trail everything. So during the process, just make sure and talk to your loan officer and tell them what your plans are between transferring money between the accounts. And that way we can have a solid plan with that. using money from undocumented accounts. Many times we'll see suddenly at closing, this money shows up, we don't know where it comes from, and so we have to figure out where it comes from and paper trail it. So just make sure and tell your loan officer all of that and figure out a good plan. And also not completing the tasks quickly and timely. We have a lot of things during the loan process. You have to sign disclosures and different things. So the quicker you get that done, the easier it is for us to move forward with the loan. So in closing on your home loan, when you come in, you will want your ID, bring your ID. The loan closing can take as little as 45 minutes, but it may take up to 2 hours depending on if you have a lot of questions. So make sure and schedule your time and have a little extra time for that. Once you sign the loan documents, those will go back to the title company, or go back to the lender. And once we're funding the loan and it records with the county, at that time is when you're actually going to own the property. So usually the loan documents are signed a couple days before loan closing. And it's important to choose your team. I think one of the most important things during the loan process and the home searching process is to choose your team. Choose a knowledgeable realtor, definitely someone like Nagaraj, and is a knowledgeable realtor that knows the market, knows how to get your offer accepted. Your team and your loan officer are going to be working for you, trying to get your offer accepted. It's a very, very competitive market out there. So you definitely want someone that is going to work very, very hard for you, and someone that knows the process and knows how to get your offer accepted. So there's lots of different scenarios. I do a lot of different types of loans at LoanLock. I can do a lot of low down payment options. Some of the investors that I work with are both regular investors and also work with a lot of credit union investors that I do the loans for them. There's a lot of different scenarios that I can do that traditional lending might not be able to do. And each situation is very, very unique. I try to be able to use all income that is necessary, and I can get sometimes exceptions for that. So if you have any questions, it's hard to go over all of the scenarios that you may have, but if you have any questions as far as unique scenarios, please come up and see me, or we can schedule an appointment at a different time. I can go over any personal scenario that you have, give you potential interest rates, and if you want a pre-approval, then we can do that as well. So thank you for having me today, and if you have any questions, please let me know. Thank you very much.
And that was April,
You're welcome.
and of course challenging times in the world of mortgage, but April is always there to help.
Thank you, April.
Thank you.
Thanks for flying from there. And she is very helpful for a lot of buyers around here might have worked with her recently.
Do
She
you want
has
this back?
very good loans, especially
Thank you.
less than 50%
I got you,
EPA,
thank you.
up to 50% EPA also. Do talk to her. She has a group there. She